Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about the petrifying pattern. This is a term you've probably never heard of. As you know, I've been going through all the textbooks, Eastern and Western. I'm trying to make a video on all these concepts. But the petrifying pattern is actually another word for the Harami cross. Now, we have separate videos on the Harami cross, the Harami, but I thought it'd be fun to make another one with the name petrifying pattern. And it makes sense because if you think about the petrifying pattern, and here's the Harami cross, you can read about it. And it's essentially a Harami, but it's a doji instead of a spinning top. And it's petrifying because petrifying means like scary, or you're almost scared to death. Because this trend, the trend that's preceding it, has been scared to death, right, with this Harami cross. So again, with any reversal, you're going to need a trend. Let's say you have a strong uptrend, and then you get, let's say, your nice big body, and then you get the doji. The doji, after all these nice candle bodies, big green candle bodies, maybe even, three white soldiers or three advancing soldiers into another big green candle, but it was kind of a blow-off move, right? Because you get the big volume on the move, and then you get the big price expansion with the candle body, and then you get the Harami cross. Or the petrifying pattern. The prior trend that got you there is petrified, right? And it's really just another way to say Harami. But the thing about the Harami is you want to look for volume. So in this case, you'd actually want to see more volume on the doji than on the candle before it, really showing that a battle had taken place, that sellers stepped in and challenged the trend that was carrying the price. You have a downtrend, the price is moving down, then you get maybe some large candle, and then you get the doji, which is completely inside the body of the prior candle, and ideally, again, more volume. So something like minor volume, maybe a little bit more, and then boom, big volume on the Harami cross, aka petrifying pattern. The downtrend has been petrified. It has been challenged, and now it's getting ready for a reversal. Now, again, with candlestick patterns, these are all short-term reversals. You may, in this case, maybe only get a reversal back to something like a middle Bollinger Band, in the same case here, back to the middle Bollinger Band, something like that. But it is something to pay attention to. And again, the difference between the Harami and the cross, it's even weaker because you can't even form a candle body here. You get a doji instead of a candle body. So it's a even weaker version of a Harami. It's a Harami cross, and it is called a petrifying pattern. Pretty scary, huh? This is the Trading Encyclopedia Daily Education series on my YouTube, Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and I'll talk to you soon. Big Chads out.